At first, you do most of the work. But eventually, your capital starts doing more of the heavy lifting.
Your first $100,000 is the hardest. But once you reach it, your money can finally start working harder for you.
Why your first $100,000 is so hard to reach, the real reason. Have you ever wondered why your first $100,000 feels almost impossible to reach? You work, you earn money, you try to save. But somehow months turn into years, and that six-figure number still feels incredibly far away. Here's the strange part. Once you have a meaningful amount of money invested, building more wealth can become significantly easier. But getting there in the first place, that's where most people struggle. And it's not simply because they don't make enough money. The real reason is much more interesting. Your first $100,000 is difficult because you are trying to build wealth without having much wealth working for you. In this video, we're going to break down exactly why the first $100,000 is so hard, why the next $100,000 can be easier, and what you can actually do to reach that first major milestone faster. Let's get started. The first problem: your money isn't working hard enough. Imagine you have $1,000 invested. Even if your investments perform well, the amount of money they generate isn't going to change your life. A 10% return on $1,000 is only $100. But imagine you have $100,000 invested. That same 10% return would represent $10,000. Nothing about the percentage changed. The difference is the amount of capital working behind it. This is one of the most important concepts in wealth building. Your early years are mostly about you creating wealth. Your later years become increasingly about your money creating wealth. And that's why the first $100,000 can feel painfully slow. At the beginning, your investments simply aren't large enough to produce meaningful dollar gains. You are doing most of the heavy lifting. Your first $100,000 is mostly about your behavior. A lot of people think getting wealthy starts with finding the perfect investment. The perfect stock. The perfect cryptocurrency. The perfect real estate deal. But your first $100,000 usually has much less to do with finding the perfect investment. It has much more to do with controlling your behavior. Think about it. If you invest $300 a month, that's $3,600 a year. If you increase that to $500 a month, you're investing $6,000 a year. If you can eventually reach $1,000 a month, that's $12,000 a year. The biggest difference isn't necessarily the investment itself. It's the amount of money you're consistently putting to work. This is why increasing your savings rate can be incredibly powerful during the early stages of wealth building. The second problem: lifestyle inflation. Here's another reason your first $100,000 can feel impossible. Every time your income increases, your lifestyle often increases with it. You get a raise. Then you upgrade your car. You move into a more expensive apartment. You eat out more. You subscribe to more services. You start buying things that seemed unnecessary a few years ago. And suddenly your income is higher. But your savings aren't. This is called lifestyle inflation. And it can quietly destroy your ability to build wealth. Imagine someone making $50,000 a year. They live on $45,000 and save $5,000. Then they get a raise and start making $60,000. Instead of increasing their savings significantly, they increase their lifestyle to $55,000. Now they're earning more. But they're still only saving $5,000. The income changed. The financial future didn't. That's why every income increase creates a decision. You can consume more. Or you can allow your future self to own more. The third problem: people want fast results. This might be one of the biggest reasons people never reach $100,000. They get impatient. They invest for 6 months. Nothing dramatic happens. They invest for another year. Still nothing life-changing happens. So they start searching for something faster. Maybe a risky stock. Maybe crypto. Maybe options. Maybe some online business promising huge returns. The problem isn't that opportunities don't exist. The problem is that chasing extraordinary returns often comes with extraordinary risk. Building wealth usually looks boring while you're doing it. Saving, investing, waiting, repeating, and repeating again. The process doesn't feel exciting. But boring consistency can produce extraordinary results over a long enough period. Hash the fourth problem, you're starting without momentum. Think about pushing a heavy car. The first few seconds are difficult. You push. Nothing seems to happen. You push harder. Eventually the car starts moving. Once it's moving, keeping it moving requires less effort. Building wealth can feel similar. Your first $10,000 may feel extremely slow. Then $25,000. Then $50,000. And eventually something changes. Your investment returns begin to become noticeable. Your savings habits become automatic. Your income may increase. Your financial decisions become more intentional. And most importantly, you have capital. That capital becomes your wealth building engine. Hash why $100,000 is such an important milestone. $100,000 isn't magical. There's nothing special about the number itself. But psychologically and financially, it can represent a major turning point. Let's say you have $10,000 invested. A 10% return is $1,000. That's helpful, but it probably won't transform your financial life. Now imagine having $100,000 invested. A 10% return would be $10,000. Again, returns are never guaranteed. Markets can go down. Some years can be negative. But the principle remains. The larger your investment base becomes, the more powerful compounding can become over time. And that's why your first major pile of capital is so important. You're not just saving money. You're building an asset that can potentially generate more money. So how do you get to $100,000 faster? The first step is simple. Stop focusing only on investment returns. Focus on your savings rate. If you are investing $200 a month, increasing your return by a few percentage points won't necessarily transform your situation. But increasing your contribution from $200 to $500 could make a huge difference. So ask yourself, how can I create another $100 a month? Then another $200. Then another $500. Maybe it's through a better paying job. Maybe it's overtime. Maybe it's freelancing. Maybe it's a small business. Maybe it's cutting expenses that don't actually improve your life. The goal isn't to live miserably. The goal is to create a gap between what you earn and what you spend. That gap is where wealth is built. Second, automate the process. One of the biggest mistakes people make is saving whatever is left at the end of the month. Because usually, there isn't much left. Instead, reverse the process. Get paid. Save or invest first. Then spend what's left. Automating your contributions removes emotion from the equation. You don't have to decide every month whether you're going to invest. The system makes the decision for you. And when investing becomes automatic, consistency becomes much easier. Third, don't try to look rich. This is one of the most underrated wealth-building principles. Looking wealthy and being wealthy are completely different things. A person driving a $70,000 car might have very little invested. Another person driving an older car might have hundreds of thousands of dollars quietly working in the background. The first person looks rich. The second person may actually be building wealth. Your financial goal shouldn't be to impress people you barely know. Your goal should be to create freedom for yourself. More options. Less financial stress. More control over your time. That's what money can ultimately provide. Fourth, give yourself time. Here's something nobody wants to hear. You may not reach $100,000 as quickly as you want. And that's okay. If it takes you 5 years, that's 5 years of learning. If it takes you 7 years, that's 7 years of building financial habits. The danger is not taking longer than someone else. The danger is quitting because someone else got there faster. Someone else's timeline doesn't determine yours. Your job is to keep moving forward. Hash the real secret. So what's the real reason your first $100,000 is so hard to reach? It's because in the beginning, almost all of the work is being done by you. Your paycheck creates the money. Your discipline protects the money. Your savings rate determines how much gets invested. And your patience allows the investments to compound. But eventually, the equation starts changing. Your capital becomes larger. Your investments become more meaningful. Your returns can become more noticeable. And your money starts doing more of the work. That's the transition you're trying to reach. You're not just chasing $100,000. You're trying to build the machine that can eventually produce much larger amounts of wealth. Hash final thought. If you're currently at $2,000, $10,000, $25,000, or even $50,000, don't underestimate how far you've already come. The first dollars are the hardest because you're building everything from scratch. But every dollar you save and invest is another worker joining your financial team. And eventually, those workers can start working for you. So don't obsess over getting rich overnight. Focus on increasing your income. Control lifestyle inflation. Invest consistently. Avoid unnecessary financial risks. And most importantly, stay in the game. Because the first $100,000 may feel like the hardest. But once you build that foundation, you're no longer starting from zero. And that can change everything. If you found this video useful, subscribe to *bin invest * for more practical videos about money, investing, and building long-term wealth. And remember, your first $100,000 isn't just money. It's the beginning of your money working for you. Thanks for watching my Bin Invest YouTube channel.